Bank of America, U.S. Bank, the country's second and fifth largest banks, both fighting for your mortgage. But which one really costs you less? We read the fine print so you don't have to. 7 rounds, scored head to head, one comes out ahead. The affordable programs are where these two split hard. We're comparing Bank of America and U.S. Bank across 7 things that decide your mortgage. First, rates and fees, what it actually costs. Then loan product range, can they finance your situation? Digital experience and speed to close, will you make your closing date? Customer satisfaction, how borrowers really rate them. Refinance and affordable programs, the first-time buyer and refi help. Complaints and regulatory record, the trust question. And finally, channel and scale, how big and how available each one is. That's 7 rounds. First up, rates and fees. Bank of America isn't the cheapest sticker rate, but it plays a different game. Preferred Rewards members shave roughly $200 to $600 off origination fees, with the top tier getting up to a 0.375% fee reduction and HELOC rate cuts up to 0.625%. Stack that with up to $17,500 in non-repayable grants and, for an existing customer, the effective cost can beat the headline shoppers. Just know, no rewards relationship, and you're roughly middle of market. U.S. Bank is a low-fee, high-rate lender, and the numbers say so. Its 2024 average 30-year fixed ran about 7.68%, roughly 1.13 points above the national average of 6.55%. Existing depositors do get closing cost discounts, and the low-fee posture helps. But the origination fee structure isn't clearly posted, and shoppers keep finding the note rate higher than online lenders even after the low-fee pitch. So on rates and fees, the winner is Bank of America, 6-4. Neither leads on rate, but BOFE's discounts and grants go further. But a good price means nothing if they can't finance your situation. You've built equity and want a lower rate on a shorter term. Bank of America offers rate and term and cash-out refinancing, and if you're a Preferred Rewards member, you shave $200 to $600 off origination fees plus rate perks on home equity. But you still pay normal closing costs, and borrowers here often report the process dragging past the promised date. U.S. Bank's Smart Refinance is built for exactly this. No closing costs, terms up to 20 years, with cash out available. You skip the upfront fees entirely, though the note rate usually runs a bit higher to make up for it. For someone who doesn't want to write a check at the closing table, that trade can be well worth it. But which one actually gets you to the table on time? On to loan product range. Bank of America's shelf is wide. Conventional, FHA at 3.5% down, VA with no down payment, refinance, and HELOCs. It stretches to jumbo financing up to about $5 million for higher balance buyers, plus doctor loans and new construction financing. And it has the headline affordable option almost nobody else offers, the zero-down community affordable loan solution. The one real gap is USDA Rural Loans, which it doesn't list. U.S. Bank arguably has the deeper standard menu. It covers conventional, FHA, VA, and the USDA Rural Loans BOFA skips, plus jumbo up to about $3 million, construction and lot loans, home equity, portfolio and physician mortgages, and investment property and second home financing. Its no closing cost Smart Refinance is a distinct product. The trade-off? Its jumbo caps lower than Bank of America's $5 million. So on loan product range, it's a dead heat, 8-8. BOFA goes bigger on jumbo and zero down. U.S. Bank goes broader on standard loans. But can they actually get you to the closing table on time? Now, digital experience and speed to close. This is where Bank of America has quietly turned a corner. It jumped from third to second in J.D. Power's Mortgage Origination Satisfaction Study, scoring 792 in 2025 as its originators went more advisory. The mobile app and the Erica AI assistant handle servicing well. The catch is real, though. The most common complaint here is slow closings, unresponsive consultants, push timelines, and commitment letters delivered late. U.S. Bank has the tooling, a Blend-powered online application, and the loan portal for tracking and documents make the paperwork genuinely smooth. But the origination experience itself lagged. It scored roughly 20 points below the industry average in J.D. Power's 2024 origination study. Reviewers describe classic big bank bureaucracy. The upload is easy, but getting a human to unstick a file quickly is the hard part. So, on digital experience and speed to close, the winner is Bank of America, 7-5. BOFA's origination satisfaction is rising fast. U.S. Bank sits below average. But rankings aside, how do real borrowers actually rate them? The seller wants a fast close, and you're on the clock. Bank of America's loan officers can move, but the most common complaint here is exactly this moment. Commitment letters delivered late, timelines pushed, borrowers told they aren't the only customer. One reviewer had a 45-day window and still had to extend twice. On a tight deadline, that's the risk you're taking. US Bank has the digital tooling, a blend-powered application, and a loan portal to move documents fast. But its origination experience scored about 20 points below the industry average, and reviewers describe classic big bank bureaucracy. The paperwork uploads smoothly. Getting a human to unstick a stalled file quickly is the harder part when the deadline looms. When the clock runs out, neither one guarantees the finish line. Then there's customer satisfaction. Here's the split that defines Bank of America. Its mortgage borrowers rated about 4.82 out of 5 on Zillow across more than 12,000 reviews, genuinely strong. It holds an A-plus BBB accreditation dating back to 1949, but the general brand tells a darker story, roughly 1.3 out of 5 on Trustpilot, with about 85% of reviews rated bad, as broad banking frustrations bleed onto the mortgage name. US Bank edges it where it counts for homeowners. Its Zillow mortgage rating is an almost perfect 4.99 out of 5 across more than 20,000 reviews. And after closing it shines. It scored more than 40 points above the industry average in J.D. Power's 2025 servicing study. The blemish is the same as its rivals, a bad Trustpilot rating across 1,300-plus reviews. So on customer satisfaction, the winner is US Bank, 8-7. Both have ugly Trustpilot brands, but US Bank tops Zillow and servicing. In 2023, the CFPB fined Bank of America $12 million because loan officers skipped legally required demographic questions and falsely recorded that applicants declined to answer. That was on top of a separate $107 million redlining settlement. Round 5. Refinance and affordable or first-time programs. This is Bank of America's knockout round. Its community affordable loan solution offers a mortgage with zero down payment, zero closing costs, no mortgage insurance, and no minimum credit score. Qualification runs on timely rent, utility, phone, and auto insurance payments instead of a FICO cutoff. Layer on up to $17,500 in non-repayable grants, and it's one of the most generous affordable packages a mainstream bank offers. The one limit, it's restricted to select markets. US Bank's answer, the American Dream Loan, is genuinely good, just not zero. It allows as little as 3% down with a minimum of $1,000, covers your PMI so you pay none, and provides up to $10,000 in assistance for down payment, closing costs, or repairs. It's available in 31 states and accepts FICO scores as low as 640. And its no closing cost smart refinance is a strong refi play. So on refinance and affordable/first-time programs, the winner is Bank of America, 9-7. US Bank's American Dream is strong. BAFE's zero down, no credit score program is stronger. But generous programs mean nothing if the lender can't be trusted. You've paid rent on time for years but barely have a credit score. At most banks, that's a wall. Bank of America's community affordable loan solution doesn't even set a minimum credit score. It reads your rent, utility, phone, and auto insurance history instead. Zero down, zero closing costs, no PMI. If you're in an eligible market, you could walk in with almost nothing and still leave with keys. US Bank's American Dream Loan can still help, but it asks for a FICO around 640 and at least 3% down, roughly $1,000 minimum. In return, you get up to $10,000 in assistance and no PMI. If your credit clears the bar and you're in one of its 31 states, it's real support. If your file is truly thin, you may not qualify at all. But what if you already own and just want a cheaper payment? Next up, complaints and trust or regulatory record. Bank of America carries the heavier baggage here. In 2023, the CFPB fined it $12 million after finding loan officers falsely recorded that applicants declined federally required demographic questions, and a separate DOJ action recovered $107 million in redlining relief. Add roughly 7,500 BBB complaints over 3 years, and hundreds of CFPB mortgage complaints a year. It keeps an A-plus BBB grade, but the regulatory scars are real. US Bank's record is noticeably cleaner on the mortgage side. It logged about 378 CFPB mortgage complaints in 2024, mostly about the payment process, not lending misconduct, and holds an A rating with BBB accreditation. There's no headline mortgage lending fine on its record. The friction that does show up is servicing and payment processing hassle, not fair lending violations. So on complaints and trust/regulatory record, the winner is US Bank. 6-4. US Bank simply carries fewer complaints and no mortgage fine on record. But which one is actually big enough and near enough to reach you? And finally, channel and availability or scale. Bank of America lends in all 50 states and originates through a roughly 3,700 financial center retail network, plus phone and online, the widest physical footprint in this matchup. As the country's second largest bank, it has a deep balance sheet, tens of millions of existing deposit customers to cross-sell, and can portfolio certain loans. It funded somewhere around 23 to 29 billion in 2024. The catch? Its best affordable programs are geographically restricted. US Bank is the mortgage arm of the fifth largest US bank and actually out-originated Bank of America in raw mortgage volume, about 30 billion across 74,500 loans in 2024, roughly 10th nationally and among the top 5 bank lenders. It lends in all 50 states plus DC, but its branches sit in only about 40 states, its book skews heavily to the West Coast, and it has trimmed mortgage staff. So on channel and availability/scale, it's a dead heat, 7-7. BofA has the bigger branch reach, US Bank has the bigger 2024 loan volume. Bank of America takes 3 rounds, US Bank takes 2, and 2 are dead even. It's not a blowout, it's 2 relationship banks with opposite strengths. Bank of America wins the affordable lending and loyalty game. US Bank wins servicing and a cleaner record. Who's each one for? Thin or no credit? Bank of America's community affordable loan solution sets no minimum credit score. Already bank with them? Preferred rewards stacks discounts. Hate closing costs on a refinance? US Bank's smart refinance charges none. Care most about life after closing? US Bank's servicing scored well above the industry average. Here's how to choose. Go with Bank of America if you need zero down, no credit score affordable lending, or you already bank with them and want preferred rewards discounts and a branch on every corner. Choose US Bank if you want a no closing cost refinance, top-rated servicing after you close, or a cleaner regulatory record with the broadest standard loan menu. If neither fits, shop a non-bank lender on rate. If a lender ever blew your closing date or buried a fee, tell me in the comments. The worst story might become our next video. Like and subscribe for a new comparison every week. Thanks for watching.